Hello, everybody. Chad Lubin, Cross Country Mortgage. Hope your home search is going well. I hope we're answering all your questions about mortgage financing and any offers you're making. And I just wanted to thank you for always watching these videos. I hope you enjoyed my video last week on supply and demand and why the supply is not going to catch up with current demand anytime soon. I will list the video below, so watch this video and then go watch that video if you didn't have a chance to check it out. I know it's about 12 minutes long, but it'll educate you a lot on why I don't believe home prices are going backwards. I believe they'll continue to rise, not at the levels that they have been the last couple of years, but I think we'll go back to that typical 3 to 5% appreciation that we see nationally. Wanted to let you know there's some big reports due out on Thursday for our economy. So you'll likely see interest rates move on Thursday. There's personal spending, there's personal income, there's personal consumption expenditure, and the big one is the CPC report. This shows some inflationary numbers in it, and hopefully these are starting to be contained. And you also get some initial jobs numbers. So lots of reports due out Thursday. That means some movement in the markets, and definitely when it comes to mortgage rates. And speaking of mortgage rates, we have had a very nice run up in mortgage bonds, which means lower mortgage rates from the highest interest rate in the last 8 years of June 14th to the current level of today, June 28th. This is Tuesday that I'm shooting this. You're going to see this tomorrow. However, we are a little bit off the June 23rd high in mortgage bonds, which means the lowest rates. So I get a lot of questions of like, hey, why is your rate so much better than this other lenders? Or why is your rate worse than this other lenders? Well, if you're not checking within the same hour between two different lenders, it's going to be different because the markets are changing so much and so volatile that interest rates change 2 or 3 times a day. Now, you need to work with an expert like myself that's been following these markets for 20 years, understands these markets, and knows the best time for you to lock in. So you can see these diamonds are where we locked in. We correctly called this, right, which was the best interest rate. We locked in many of our clients there, and it was the correct call because mortgage bonds went down, which means mortgage rates up after that. We protected our clients here from further increases. We protected our clients here. So as you can see, these diamonds are where we locked in our pipeline, and after them, rates got way worse. But also what you need to know is, as you can see, we didn't lock in here on all of these, and we captured all this improvement in rates for the client. So too many people just get their contract, lock in right away, and don't consider, and their loan officers don't have the capacity to understand the markets and understand where they should lock in. So I just wanted to make you aware of that. We're seeing rates in the high 5s, low 6s. And 15-year rates are in the high 4s to low 5s. So that's what we're seeing right now. That will depend on your down payment. That will make your interest rates higher if you're not putting 20% down. It depends on credit score, and it depends on property type. So everyone's interest rate is different, but that's the average on what we're seeing right now. If we can run any numbers for you, please call my team at 312-731-4939. You can also text that number. You can also email us anytime, chad@thelubingroup.com. Have a wonderful 4th of July holiday. Be safe. God bless America. And I hope you have an enjoyable time and a couple of days off to enjoy our freedoms and our country.